So we're really going to focus on technical analysis. We're not focusing on investment because two different approaches. Technical analysis is how do you read the charts to get in and out of trades, whereas for investment you focus on fundamentals, you focus on the financials of the company, the management, and other indicators. But for technical analysis, we don't focus on that. Of course, once you learn this, you can use technical analysis to make your investment entries better, right? So it supplements it. But mostly I use technical analysis for just making a decision on a daily basis, when to get in, when to get out. And when I say on a daily basis, I don't have to get out the same day. I can get out the following day, the following week. But it's very, very short-term approach, extremely short-term approach when we're doing technical analysis. So that's what the focus of this lesson series is about. I don't claim to be an expert. I just give you education. I just want to make sure that I call this out, right? I also want to sound professional. So I'm just gonna educate you, give you all the knowledge that I know, so that you can make informed decisions as you get into trading, or even if you don't want to go into trading, but at least you know what to do. My style is I prefer to be an interactive lesson. If you guys have questions, there is no stupid question. One of you have a question, I'm sure others are wishing somebody else would ask that question, right? So don't be shy. I think it's extremely important that you ask those questions. That's how we help each other. I might even learn something new as we go into that. So any questions before we dive in? Right now, we're not going to focus on the candlestick patterns. There's a specific reason why I'm showing you this. The way you're going to use this chart is way down the road. You can order it if you want, but for me, it's on the side here. It's a poster. I have it here. I have a big poster in front of me that has different kind of chart patterns. Like, what does it mean when price is narrowing down or it's widening up? All of that I have in front of me. But that stuff we'll get into down the road. Right now, the only thing I want you to focus on is this candlestick basics. This is what I want you to focus on. And why do we focus on that? Well, first you got to understand how to read each candle, right? So how to read each candle. Each candle is telling us a story. And the way you read candles is each bar represent some time frame. That time frame could be a year, could be a quarter, a month, a week, a day, or like shorter time frame, like 8 hours, 4 hours, 2 hours, 1 hour, down to minutes. There are some charting platforms that can even show you seconds. That is extremely unnecessary in my mind. Even minutes is really not that interesting, especially as you're learning. I want you to focus on understanding the process and don't worry about the shorter time frame. Shorter time frame sounds sexy. When people talk about day trading, they say, oh yeah, I used a 1 minute chart and I was in and out, I scalped. You know what? You make more money using the 1 hour charts than you do scalping the 1 minute chart. So I tell you that from experience. I've been doing this for 15 years plus. I keep saying 15 years every year, so it's probably closer to like 17, 18 years now. So the 1 minute charts is a lot of headache. Your heart rate is going to go up every second unless you're looking for that. I don't recommend minute charts. So with that said, every candle represents the time frame that you select. We'll go into that. We'll go into charting. This is just the basics that I want to cover right now, and I'll show you in different charts. So a chart at any time frame that you choose, let's just make it simple. Let's start with the daily chart. At the beginning of the day, which means at 6:30 a.m. Pacific time, 9:30 a.m. New York time, that's when the stock market opens, the bar prints its first trade. That's the opening price for that day. Throughout the day, price will go up and down, up and down, up and down. And then at 4 p.m. Eastern time, when New York says I'm done, they close the market, that bar closes. So that's a daily bar. It has an open at 6:30, it closes at 4 New York time. That's what a bar represents. So far so good? Any questions? Okay.
Yep.
There are two types of basic bars. There's the bullish bar or the bearish bar. The difference is where the price closes in relation to the open. If the price closes higher, it's a bullish bar. If the price closes lower, it's a bearish bar. In a lot of charting platforms, you'll see that indicated as green and red. Green bullish, red bearish. In some platforms, you will see the bullish bars hollow. They just are green outline and hollow on the inside. So that is something you can control. Once you get comfortable, you have your own style. When you see my charts, you'll get confused because I use my own style. I don't use I'm a rebel, right? I don't like to use the standard, right? I like to visualize it my way. So that's the very basics. You have an open, you have a close, and the wicks is how far it went up or down throughout that bar. Again, remember, on a daily bar is how far it went up and down during the day. On an hourly bar is how far it went up and down during that hour. And every hour we print a new bar. Every day we print a new bar, depending on your time frame. You can look at multiple time frames all at once. All of those things are possible. But here, this is the basics. If there are certain aspects that you say, we know this, we can go faster, let me know. So, we got this, right? Open, close, bullish, bearish, easy, right? So far? Okay.
Yeah.
All right. So now we actually look at real charts. And when we look at real charts, what I want to show you is the candlesticks that I've shown you is called Japanese candlestick bars. There are many different forms of bars. There's bar. There's a not a candlestick, but there's a pattern you called bar. You can use a bar chart. You can use a hollow candles, where this is where I said the bullish bars are hollow. As you can see, bullish bars are hollow. You can have line bars. Line bars, they only show you the closing price of the time frame that you chose. We happen to be on the hourly chart, so every hour when the price closes, they connect those dots. So that's what the line bar is. I just want to show you the different ones, but we use candlestick. That's what I'm going to teach you. Everything on is on candlestick. Everything else doesn't really matter, but as you get into preferences, you can select and maybe choose one. There's another one that you'll hear very commonly used. Is called Heikin-Ashi. Heikin-Ashi is like a candlestick. It's also created by Japanese futures traders when they were trading commodities. The difference is how they calculate the open, the close, the high, and the low. I'm not getting into that lesson yet. That's way down the road. I don't even trade Heiken Ashi, so my preferred trade is Candlestick. As you can see, the star here. That's the part that I like. That's my chart. We're gonna use Candlestick for the lesson. Down the road, if you think of using a different kinds of chart, we can discuss those as well. So remember I said I do things differently. Hollow bars for me is a bearish bar, and the fill bar is a bullish bar for me. So keep this in mind. I'm saying this deliberately. I keep that in mind because when you look at other charts, don't get confused. Don't say, hey, you're showing a bullish bar, but I'm seeing a bearish bar. Just keep in mind that I'm using the reverse. But the overall idea, the bar doesn't really matter, because we're going to talk about a lot of different things, how you pull the trigger. It's not whether that bar closed bullish or bearish. There are many aspects that we will look at to make a decision on an entry. Let me pause, see if there are any questions. All right. So when you pull up any chart, is there any particular ticker you want me to look at? Let's start with that. I think it makes conversations more interesting. What chart do you want to look at?
SPY.
All right, SPY. SPY is one of my favorites. By the way, when you're thinking about day trading, my biggest recommendation to you is tune out noise from people who will tell you, oh, if you should do Tesla, you should do Amazon, you should do Nvidia, you should do this, you should do that. Tune that out. Because once you learn the basic, you only need one, maybe four maximum stocks, ETFs to trade. For your investing, you need a bigger basket. But for trading, for me, this top three is what I trade. This top three. I'll trade a derivative of this top three. For example, TQQQ is just the Qs that move 3 times faster. So you make 3 times faster, you lose 3 times faster. Keep that in mind. It just moves 3 times faster. But it's just a derivative, right? So UPRO, same thing. It moves 3 times faster than the SPY. Outside of that, for my day trade, these are the 3 I really focus on. So SPY, I like that you asked to look at SPY. So what does this chart tell us, right? I've pulled up the monthly chart. When you look at a chart, you want to see left to right. That's how you read a chart, left to right. What is the story that it is telling you? In this case, this chart is saying, on a monthly chart, it's easier to see because you have a lot of time to look at. Since May 2012, we went down from the 150 area. We had gone all the way up to the 480 area. That's what this chart is saying, right? Very simple. Left to right. We look at everything left to right. What is it telling us left to right? So sorry?
Saying it's like on a bull run right now when you look at it from that period.
Yeah, when you look at it from this period, it's a bull run, right? That bull run is still intact. As we get into more sophisticated way of looking at charts, that's when we decide, oh, this bull run is taking a pause, this bull run is about to reverse. So we'll look at that. The idea of technical analysis is if you just look at a period, a small period of time. I'll use this period of time here. So when you are looking at this chart right here, let's just look right here. So we went from this low to the high of 215. When you're trading, you don't chase. You don't enter when price is at the peak. You don't know peaks and valleys, right? You don't know that. However, when chart is just shooting straight up, that's not the time to enter. Just have that in mind. I'll show you how I would prepare you to find opportunistic moments to enter. So the person that wants to enter here around the 215 line, let's just make that a little bit bigger so you can remember. So this line here, the 215 area, what happens as we, so if the person had entered here this month, February 2015, 203, oh, price has come all the way from here to here, I'm about to miss out, let me enter a trade. And when you have a trade, you have an entry and an exit. You enter and you have an exit. If it goes against you, you have a stop loss. If it goes in your favor, you have an exit. If you don't have an exit, then that's risk management that we have to also discuss down the road. So this person enters 213. They say, wow, you know, I've missed all this move. I'm going to enter a position. And then, you know, a couple months go by. Look what price has done. It is stalling at that price. It has actually went down from this high to this low. It has gone down 15% in a matter of 12 months. So that person is hurting. They're sitting in a losing position for 12 months. I'm not talking about investing, so remember that. In investing, you don't care about this volatility because long term, you must be long-term bullish to enter that position. So this person is hurting for a few months and then boom, it goes in their favor. If a person is entering positions using options, then their options expire worthless because it's not going in their favor. We'll talk about options later on how to think about options, but just to have a note, right? So that's why I said you don't enter a position when it's just keeps going up or when it keeps going down, for that matter, for bearish positions. So what you want to find is this idea of structure. There's an idea of a structure and an area of value. All right. We have Nabiyu in the house now. We can see you. All right. So talking about structure. The structure says, what is this chart telling me structurally? Is it in an uptrend? Is it in a downtrend? Or is it broken? That's what I mean by structure. Right now, in general, the structure is in an uptrend. Do you agree? Right? It's a bullish market when we're looking at SPY. That's the structure we're in. So thinking of structure, then the next step is an area of value. An area of value is where you find an area to enter or an area to exit. It can be on either side. So when price has a nice bullish structure, if we just focus on the bullish momentum for now, when it's going up, it has a nice bullish structure. What you want to know is hey, when is it taking a break? I want to enter when it's taking a break. I want to enter when it's taking a break. Because if you enter here, if you're chasing, you enter here, you're in pain for some period of time, depending on your chart, right? If you're looking monthly, this is a few months. If you're hourly, it's a few hours. Irrespective, you're in pain for some period of time if you are chasing. That's why understanding structure and area of value is critical. So area of value, we will define how we find that area of value. How do you find these turning points? We'll talk about momentarily. But the idea is when you have the structure, you follow the structure until the structure is broken. And you find an area of value to enter. You don't, because you don't want to chase. Any clarification? We good?
In both directions, right?
In both directions.
Upward.
And downward. You look at structure and then you find an area of value. And how do you know when a structure is broken? Is when a trend decides to move a different direction. So this uptrend, at some point X, it decides to reverse. So that's when you know the structure is broken.
Do you keep in mind like news? Like like when Jay Powell is speaking, like do you take that into account when you're trading, or any major like
any major event? So
yeah.
Big events like NFP report, first Friday of the month, when Powell speaks at any time, those are big events that move the market. So in trading, for me, when there's an event, I don't place a trade or I exit a trade because that event could take it in any direction. There are days, like today, I knew Powell was speaking. I looked at the chart and the chart said, you know what? I don't think he's going to take it down. We are going to go up. So I entered the position. It went down momentarily as he was speaking, but we closed up for the day. But you really have to trust your chart and you really have to know, you know what, I've made, X amount of money this last week and I can risk a little bit in this trade, right? So risk management comes into the picture. But outside of that, in general, what I say is exit your position right before he speaks. You can always get back in. And do not enter a position right before he speaks or right before that big event. Right? The Thursday before the NFP report, you don't take a new position. Because that report comes out before markets open. And if the report is bad, your position is wiped out in minutes. That's how you do trading.
That makes sense.
Yeah. So structurally, though, if we think about the structure, right? So you have an uptrend, like this down move here. What makes it different than this down move here? Because this broke the structure, right? It went down. And markets move in this way all the time. So how do I know that this down move, when it gets down here, that, I want to enter long, this is a good entry, but this was a bad entry?
That was the question I wanted to ask. The same thing you're asking now. How do we know?
Yes.
If it's not the same trend? Like if you look at closer to 2020, between 2019 and 2020, how do you know it's not going back up at that point?
Yeah. Okay. Man, you had a follow-up question?
No, I just had a thought on his question. Is that because that low was below the previous highs which broke kind of like the trend, whereas the other downturns never broke the previous high. Like if you look at the low right there.
Okay, let me get into that. You're in the right track. I don't want to muddy it up, so let me just really get into that and explain how it works. So here, when it pulled back, this low point was never lower than the previous low point. Right? It's not only the high, but the low. I'm also looking at that low. And then it went up. When it went up, this high went above the previous high. So that trend keeps going. This low was higher than this low. This high was higher than this high. The next time we made a low, if it's higher than this low, you might say, well, I'm going to pull the trigger here. You would not be wrong to think that way. There are other things we're going to start to look at, like how do we confirm before we go up. We'll look at those different things. But a person who pulls the trigger here would not be wrong, because they were right for a short period of time. But when you see that it failed to make a new high, the structure is now broken. So the structure is not broken until we got here. This is the area that broke the structure because it failed to make a new high. Does that make sense?
Yeah.
Okay. So you pull the trigger, it fails to make a new high, it starts to go down, you better exit your position. Otherwise, it's just going to keep going down and wipe you out. So that structure tells you. So when you know a structure is broken, then you start to think of entering a position to the downside. Now to the downside, we're entering when it is pulling up the other way. Right? We're not entering, we're not chasing and entering down here. We're chasing when it has a rally, and we enter at that rally. So we haven't talked about area of value yet. So this is just a concept. Conceptually, you see your structure, you enter when you have a pullback or a rally from that structure. You don't just keep chasing. So that's how you read at charts. It doesn't matter what time frame. This thing repeats on monthly, it repeats on minute bars, it doesn't matter. But keep in mind, the 1 minute bar turns before the 1 hour bar. The 1 hour bar turns before the daily bar. So keep that in mind. It's the bigger time frame tell you the longer term trend. The smaller time frames decide when they want to break that trend. Right? So if you're going up, the first minute has to decide I'm going to start to go down, right? Every minute decides I'm going to start to go down. But on a daily bar, you might not see it yet because you're waiting for a 6.5 hour bar to finish, whereas the 1 minute bar is already deciding, it's already making its own structure at a lower time frame. So this is what I mean by structure, right? We're good on structure? Okay, good. So now the next thing is area of value, right? When price comes down here, how do you know to enter here? Two things you look at is this low higher than the previous low? We've already discussed that. But the other thing you want to look at is you look at the previous high. I didn't even draw this intentionally this way, but look where this came down to. It came down to the previous high. Not only this low is higher than the previous low, this low did not also take out the previous high. So you know this is an area of value. This is what is called support. If price spends a lot of time hitting this support area, we will draw it on a chart momentarily, but just to get the concept. If price spends time hitting this area of support, it hit it once when it was coming up, it passed through it when it made a new high. When it made a new higher low, it bounced from there. So this is an area of value. So you want to wait for price to come to a significant area of value, a previous support and resistance that you have identified. That's where you enter. But you don't enter as soon as it hits that, because it could mean that it's going to go through it and break structure. We wait for other confirmations, which we will get into maybe next week. But here's the idea is you have identified structure, you have identified area of value, you wait for price to come to your area of value, you enter. If price never comes to your area of value, you move on, right? There's no regret. Oh, I missed this whole move. Well, you know what? I can't help you there because those moves happen all the time. But what I want to teach you is stack the odds in your favor. Sometimes those other things work, but stack the odds in your favor. What you want to capture from this big move, you want to capture this. About 80% of that move is what you want to capture. You never know the true bottom, you never know the true top. But you want to capture a significant amount of that move. So that's the goal. Very simple. If every trade you go after home runs, I guarantee you'll wipe out your account in no time. But to be consistent, you have targets, very strategic targets. And in this example, once we have identified area of value we enter, this next area could be a resistance. It could turn from this area. So a few cents below this area is my first target. Half of my position with profit is removed. The other half, I see what it wants to do. And then at a certain predetermined price, even the other half, I exit. If it wants to keep running, it's irrelevant to me.
So you just trim. Do you have a certain percentage where you trim at?
50, 25, 25. That's in general, that's how I trim. Sometimes I might just do 100% exit at this area because I have seen other indicators that says, hey, this is really as high as we're going to go today. Right? It could happen. But in general, 50, 25, 25. All right, so structure is good. We're good on structure. Are we good on area of value? Yeah, so that's key. That's really key to trading. So now let's identify. I think structure is not easy to identify. But keep in mind the zigzag, right? It's all about the zigzag. If you don't see the zigzag, skip. Go to the next trade. If you cannot see it, it is not tradable. I can see it, you cannot see it, you can see it, I cannot see it. Like one of us has to not trade because one of us is not seeing it, right? Just because Zena says, hey, I see this nice pullback, it's time to enter. If you don't see it, you don't pull the trigger. You have to see it for yourself. Are we clear on that? Okay. So if we look at this monthly SPY, here's structure, zigzag. I'm just going to draw it on here. Here's a zigzag. Let's just use this whole thing here, like this. Okay, you see it? You see the zigzag? Very clear, right? You see structure, and you want to find area of value. But first, we see structure. So this is how you do it. Every time you come to a chart, draw the zigzag. Take your charting tool and draws a zigzag. This, by the way, I'm going to send you guys the link to the TradingView. Just use my link to sign up. It's free. Don't pay. Use the free one. You'll see a few things on my chart because I use the paid one, but don't pay. You're not there to pay it. I'll tell you when you're ready to pay. But use my link so that if you decide down the road to pay, then we both get credit for that. But for now, please do not pay. No need to rush, right? The free is enough for your practice. So once we see the zigzag, we understand that. Now let's identify area of value. Again, as you can see, I'm staying on the monthly, right? I'm not going down in any other time frame because every time frame we can see the same thing. So first thing, I use other techniques a little bit more advanced, but for the basics for now, and I'll give you a homework. All I want you to focus on is the zigzag and support and resistance. That's your homework for next week. Zigzag, take different charts, draw zigzags, take a screenshot because we'll talk about those screenshots next week. And then you draw your support and resistance. How do you draw support and resistance? In this line up here, you can see in this area, price struggled, right? A few months, it stayed below this price. A few months, it just keeps hitting it a few months in a row. That's a strong, when it's a few months in a row like this, is a strong area of resistance or support depending on which side is coming. When it's coming from the bottom, it's resistance. When it's coming from the top, it's support. And check this out to see how accurate this is. May 2020, where did price stop?
At support.
At support. The support that we drew in 2015. It took 5 years to come back to that area, but it went right smack there and reversed. So these are absolutely strong areas. Support and resistance, absolutely strong. But don't just draw a support just because you saw it one time. One time doesn't count. 2, 3, 4 times, but multiple times. Like here, as you can see, this line here, multiple 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 months in a row where price stayed in this area. That's your support resistance. That's how you draw support and resistance. You look left when price has a tendency to spend time there. That's how you draw your support and resistance. And you draw it from top and bottom, right? It's not just top side, because here at the bottom, price also is bouncing in this area. Very, very important. Support and resistance is not a line. It's not a price point. It's an area. So when you draw a line, you imagine it's an area. It's a zone. Think of it as a zone. So it could be, you could even draw it like this. You could say, you know what, this is my hole. You see, it's a different color box, the rectangle. So think of it that way. It's a zone. But to make the visual easier, just, you draw a line. So why do we do this? When we are past that zone for our entry, remember our entry is area of value. These are area of value. When price comes down here, I want to enter. When price comes down here, I want to enter, right? It went up. Here we don't know yet, right? Because this couple of months is where that support was formed. But when, so 2018, March 2018, but when you come to December 2018, you already have the benefit of this support, and it's, okay, price comes down here, and it is struggling to go past it. The next month it's actually closed higher, and boom, we went. And you take your first exit at 50%, remember. So we've entered when price re-enter here. if you don't take your exit here, the next month, you've seen some of your gains gone, right? Sometimes it could be all the way down. That's why I encourage you to take some profit as you made some money. This is a nice move from the 260 area to the 290 area, $30. That's a nice move. Take some profit, and then it keeps going down. If you don't take profit, what happens? Boom, that whole thing collapsed even below your entry. That's why I encourage take profits along the way. So area of value, we've identified zigzags, we've identified area of value, and we're going to keep identifying area of value like this zone here, price 1, 2, and then here also it danced around there. So that's an area of value. So now, once you know area of value, when price comes down to that area of value, this is where I want to enter, right? So in your homework, do not worry about entry. Your homework is draw zigzags, draw support resistance. And I encourage you to take notes so that if I ask you why is this support line important, right? I don't want you to think about it on the spot. Just take notes. It will help you. It will help you understand. Okay, I drew it because I've seen it touch so many times. And like you could say, so if you zoom out enough, for example, this, we've never been up here right before. March 2015, this is the highest we've ever been. So you don't have anywhere to say, oh, this is resistance. We don't know that. But when you are looking at this area here, 2000, and then in 2007, we came back up there. Right? So that, oh, this is resistance. Why is it resistance? Because price decides to reverse again in 2008. As soon as it hit those highs, boom, it collapsed. And then as soon as it hits those highs, it doesn't want to collapse. It just kept going. That's why it's important to understand this. Okay?
So when it beat that support or resistance the second time, then you essentially have to rechart, right? Because then that broke the trend.
It didn't break the trend, it just broke the area of value, right? Because this trend here is an uptrend, right? There's no trend broken here, but it just went past the resistance.
Yeah, I forgot what term you used earlier when you said now that, if it goes below a certain...
Oh, the structure? You mean the break of structure?
Is essentially broken.
Yeah, but even that, if you focus just in this area, this structure is up, right? Because this zigzag, there's no broken structure here. Let's see. This zigzag here. Let's just stop right there. So in this zigzag, there's no structure is broken, but we broke a resistance. Right? So don't mix the two.
Yeah, okay. So can you break a structure on the way up or only on the way down?
Both ways. Whatever was up, if you start to take out the lows, you're breaking that uptrend. It now becomes a downtrend. If you're in a downtrend and you start to break the highs, then it reverses to an uptrend.
Okay.
Right? So you can break. So break of structure is the zigzag goes the opposite direction. When it starts to go the opposite direction, that's when you have broken structure.
Okay.
It takes time. You got to draw this. That's why the homework is draw the zigzags. But I'm going to make the homework a little bit more interesting because I don't want you to draw the zigzag on the monthly charts. I want you to use SPY, just only SPY, SPY, and draw the zigzag on the weekly chart, the daily chart, and the 1 hour chart. And you can go as far back as you want. That's not the requirement, just whatever you feel comfortable. So you draw the structure, those are the zigzags, and you'll see, if you go far enough, you'll see the up structure, you'll see the down structure. So you'll draw those, and then you'll draw support and resistance.
Do you decide when you go into the trades and you play options, do you decide your strike price based on some of these resistance / support values, or is it a different component?
So that's a little bit more advanced than what we're talking about. However, the strike price should always be at the money. At the money means what the current price is. The further you go from that in the wrong direction, the probability of losing 100% of your money gets to be about 100%.
Yeah. Okay. I'll save my questions when we get to that section.
Yeah. But it's a good question. But just keep that in mind, right? So I think it's good to understand once we understand structure, once we understand where to put the trigger, the option entry is the easiest part, right? So let's just focus on, can I identify an entry the right way? I think that's the biggest thing we need to work on right now. If you can identify an entry the right way, the options is the easiest thing to do. And we will do exercises to where for you to be comfortable, you will place 20 trades, paper trades, not real trades. And then we will analyze your 20 trades. But we're not there yet. So that's not all. So for now, you draw your structure and you draw your support and resistance. In the chat, I gave you the link to the charting platform, so grab it so that you can sign up. It's a quick sign up. You can just use your email address to sign up.
Where did you drop it?
In the chat.
I already have one, so I can't create another one.
Oh, you have the trading view?
Yeah.
Yeah, no, don't worry about it. Yeah, if you don't have one, use it. If you have one, then just use that. All right. Any questions?
Can you zoom in a little bit on the monthly or on the at least yearly, or zoom in a little bit more? A little bit more. Hey, what's that? So you see that blue D with a circle? What does that mean?
This? Oh, yeah. So on a chart, I don't want to see anything on your chart except the bars. I don't want to see moving average. I don't want to see anything on your charts. Just the bars. Just the bars, and use candlestick because that's the one we're going to keep doing. But however, this D is because I told TradingView to give me like corporate events or other actions. Like this D represents dividend.
Oh, gotcha.
It's like on this day, SPY paid dividend if you had the shares, not the options, if you had the shares. That's what D represents. And if you look at companies, you will see an E that represents earning. If it's green, it's past earning. If it's this magenta color, it's future earning.
Oh, okay. Nice.
Yeah.
Good job.
Yeah. But the key right now is we're just going to look at charts. That's all we're going to look at. And we're going to draw our structure. And we're going to draw our support and resistance. right? That's all I want you to do. Very simple exercise on the weekly, the daily, and the 1 hour bar. I suggest and recommend actually you start with the weekly, and then as you go to the daily, you'll keep adding, right? But just take screenshots, right? Take screenshots. Once you understand structure, piece of cake from there. We'll just build on that, right? We'll just keep adding additional things. Like all you see, these dotted lines that you see, these are other things that I use to help me find entries and exit a little bit easier than having to draw those lines.
That's the Fibonacci.
Yeah. Yeah. So, but for now is your structure and support resistance. That's it. After that, we can add trend lines. A trend line is the same as a support resistance, just going diagonally instead of going horizontally. But that's, next week or the following week. What else?
Yes. What about volume on the bottom dip?
So volume we will use when we start to think about entries. Right now we're only understanding structure, right? Where's area of value? That's what we're trying to understand. But it's a good question. What volume says is, hey, when there's heavy volume to the downside, it's saying the bears are fully in charge, right? And the orange line that you see is the average volume. It's a monthly chart, so the average volume over the previous 55 months, as you can see, volume 55, and how far above the average or below the average are we. The further away we are from the average, the stronger that move, up or down, right? The volatility is very high, so we will use that to our advantage when we pull the trigger, right? To help us confirm, oh, how do I know that it's done moving down? Well, earlier we drew support. Oh, it came to support. What else? The volume was very strong, but then it got rejected and price starts to push up. Okay, I want to use that to my advantage. What else? Well, the next bar made this thing. The next bar made this thing. Oh, now I know I can enter. When I take out this first bullish bar, when I take it out, I enter, right? You can do things like that once you understand where area of value is. If you don't know area of value, it just becomes a shooting in the dark.
So volume is both. It's a combination of the sells and buys, right?
Yes, that total volume for that bar, whatever time frame you're using. Like if it's this one is a monthly bar, so for this whole month, this month of March 2020, we had a volume of 5.92 billion.
Okay, and then the color is based on like majority, if it's majority sells versus majority buys.
No, so this is the way I code my own. I like to code my own indicators, but the way I did for mine is, if the bar is a down bar, just align the color accordingly. It just tells me which way the bar was going. So this is a bearish bar, so I see a bearish color for the volume. There are some indicators down the road as you get sophisticated that you can add that show you the difference between the bullish volume and the bearish volume. To me, the more a chart is complicated, the more I don't want to trade it. That you can go on YouTube and you can see people talk about moving averages all day long and how successful they are with it. That's adding complication. You really want to keep it simple, stupid. Really, this is how much. price is king. Price dictates everything. So if you know how to read the price, you're ahead of the game. And that's what I'm going to teach you, is how to use price.
Okay.
I have a quick question. When you
Yeah.
draw your lines,
Yeah.
when you do the arrow, how do you make it so that, once you draw like one straight arrow and you're trying to go down, it doesn't have to make you click back to the arrow, or do you have to do that anyways?
So you click to start. Here's your endpoint. So what do you want to do from here?
So
You want to draw down?
Yeah, but how do you, because for me, once you drop that second pin, it resets it, so I have to go back and click. Maybe I could probably figure it out, honestly.
No. So here's what happens. If you start, click to start. If you double click, you're done.
Oh, okay.
If you single click, it means give me my turning point. Then I can keep drawing. I keep drawing until I double click to say I'm done drawing.
Okay.
What else? Are we clear on the assignment?
Yeah.
Yeah.
Cool.
Yes.
Left?
Sorry?
Go ahead.
No, go ahead.
No, I was gonna. Is the left bar customizable? On the left, you see that option menu where you have like your arrows and your.
This here?
Yeah.
So here's my custom list down here. What you do is you click on this little arrow and then you put a star next to it. It will build this for you.
Oh, nice. Okay.
Yes. And then you can click the star here. It will remove it. You saw it?
Mm-hmm.
If you click this down here, this bar here, it brings it in or out.
Okay, nice.
Yeah. As you can see from my chart, I have no indicators, right? I have other indicators, but those are just to kind of help me see what price is doing. Very simple things. Don't worry about those for now. Don't worry about those for now. Okay. Anything else for today?
No.
We're good?
I'm just playing around with it. Mine looks different than your setup.
Yeah. We can go into the setup.
I'm not talking. No, the entire screen looks different with the all the like the top bar is completely different. Only the left bar looks the same. Everything else.
The top bar would be a little different because these are some things that I added that you won't see. You won't see these things. You will see time and you'll see bar maybe it's just one instead of three. It's just one, but for me it's three because I have starred three of them. So that's where you see slight difference, but in general, it should not have a lot of different view. So let me stop the recording.